I'm Craig Lee.
I'm Robb McGee.
And this is Real Talk with Robb and Craig. It is Thursday, the 12th of November, and today we are talking about...
When is it the right time to refinance, and when should you consider doing it? Because, Craig, not everybody should.
That's true. Some of the things that we're going to tell you that's a good time to refinance is kind of taken off of what the government enforces on VA loans, VA interest rate reduction, refinance loans. It's kind of a good rule of thumb because they really make you benefit the client, not the loan officer, not the company. It's really what's better for the client.
Right.
So that's some of the things that we're going to kind of use as a basis point on this. The first thing is if you can drop your interest rate by 0.5%. That's a good rule of thumb.
Yeah.
Conventional does not make you do that. FHA does not make you do that. VA does make you do that. One of the things you want to look at is that benefiting you at 0.5 point. If you're a $300,000 loan,
which is about the average.
Yeah, and you're at 3.5% interest on a 30-year term, your principal and interest payment is going to be $1,347. If you can take that same $300,000 loan and drop it down to, $300,000 loan amount, 3% on a 30-year term, you're going to drop it down to $1,268. So a couple $100 at 0.5 point.
Mm-hmm.
I'm going to share with Rob my cheat sheet. Number 2.
If you can recoup your costs in 36 months, and by costs we're talking about title insurance, a new appraisal if it's required, recording fees, the escrow fees, everything that might be involved. You know, there's when you're buying a home or you're refinancing a home, there's a lot of hands out, and you have to put money in all those hands. If you can get all those costs back to your benefit within 36 months, it's usually a good idea to do it.
Yeah, you're going to look at how long you're going to own the home. Is it your lifetime home? Is it? Are you going to sell it in a couple of years? If you're going to sell it in a couple of years, it might not be worth, even if you're saving whatever you're saving.
Craig and I just had a client who said that they were thinking about selling within a year, maybe less. And we told them doing the refinance was probably not a good plan because they're not going to recoup those costs. They would end up in the hole as a result of it. So.
If you can pay your loan off faster, that's number 3. What we have, and what we're saying on that, you're gonna hear that again if you can reduce your terms. But if you're comfortable paying whatever your monthly payment is, and you can save 0.5% or more, then keep paying that payment, and you're gonna pay it off. Not like the old days where everybody would say, you're gonna pay it off in 11.5 years sooner. You're gonna pay it off in 18. That's when interest rates were 7 and 7.5%. That's not going to be the case when you're looking at loans in the 2s and the 3s.
Yeah.
But you are going to save a substantial amount of money, probably 3 to 5 years. And with that...
Or more.
Or more. Yeah, you're just going to have to run each and every single scenario. But if you're saving money and you're comfortable with that payment, that's a good time to refinance and pay yourself, because that's what you're doing.
Yeah. Figure 5 years without a payment, think of the money you're saving there. Yeah.
Huge. Number 4.
Next, we've got if you want or need to save money. Who doesn't?
Everybody.
I want to save money.
I made the mistake years ago, and you caught this. We weren't saving a client a whole lot of money, and they needed that money saved.
Yeah.
I went to them and said, I wouldn't do it. I wouldn't do this one. I didn't realize what their circumstances were. Yeah. And so when Rob called them, Rob found out
that little bit of savings was very important to them, and the fact that they could take a month off from payment was very important to them. Sometimes, we always are going to be trying to steer you the right way. We don't want to do a loan for you if it doesn't benefit you. Sometimes we use our formulas and say, this is probably not the best move for you financially, but we're not seeing your full picture. You're the boss. We work for you. So if we're ever telling you, I wouldn't do this refinance, you can tell us, well, you're not doing this refinance, I am, and I need it because of this reason, and we'll help you. So.
That particular situation, they actually did go with someone else because we didn't feel comfortable doing it. Yeah. Number 5, if you can consolidate a bunch of debt and reduce your monthly outgo, that's kind of an old way of looking at doing cash out refinances. And we did that for years. We would save people, I saved one person like $1,500. The problem with that is make sure you're in control of your finances. Make sure that you're going to do this and that it's going to come back to, you're not going to go out and increase your debt again. You're not going to go right back in the same situation.
We want to put you in a position that you're going to be much better off for. And sometimes paying off that high interest credit card, if you've got a large balance, makes sense to do it. But not if you're going to go back out and charge it right back up now.
And don't say that you're going to. I mean, it's not our business. We're working for you. But I mean, seriously, try and put yourself in a better situation if you're in that.
Yeah. Number 6, if you want more to write off, don't forget. You know, the tax laws changed a couple of years ago, and folks lost a lot of the deductions that you can take. Your mortgage interest is one that is still probably the best tax deduction the average American has. So if you want to see, if you are increasing your loan amount, paying off other debt, you're going to see the dollars, even if your interest rate drops, the dollars that you are paying in interest is all deductible off of your taxes, up to, what is it, Craig, 10,000, I think?
I don't know.
And check with your accountant, but you can actually increase your tax deduction. So,
number 7, I put this on there, is if your primary residence is over 3.625, call somebody to find out what you could reduce it to.
yeah.
That number a year ago would have been a phenomenal interest rate. As of March, I think, we started seeing them drop in the twos, February, March. So please, if you're above 3.625 on your primary residence, and your credit's good, you know, all the stuff that kind of goes with it, call us or whoever.
Unless you're planning to sell your house next month, you should be talking to us or somebody. Number 7.
Number 8.
Oh, sorry, number 8. If you can eliminate private mortgage insurance, don't forget, property values are greatly increasing in our area. We're one of the hot spots in the country. You may have just bought your home a few years ago, and you'd be surprised to learn how much it's valued at now. We might be able to help you eliminate mortgage insurance. That could be a bill you're paying every month. You just don't have to pay.
Yeah, and I mean, it's a great time because rates are so low.
Yeah.
You're going to get the savings of getting rid of something that doesn't benefit you but benefits the bank.
Yeah.
That does benefit you but anyway, I'll go on. Number 8. That's number 8. Number 9, I cannot stay in track. If you can reduce the terms of your loan. So
Talked about that a little bit earlier.
We did. This is really saying if you're going from a 30 to a 15. Here's something that's weird because of rates being so low. The banks have higher interest rates on a lot of the 15-year terms. Why is that? Because they want you to stay with them longer. The longer you're with the bank, the longer you're paying the bank, the more money they make. So that's
when we were at interest rates of 7, even 6%, we would see a big difference in the 15-year note, the interest rate. Now, because of how low that 30-year rate is, there's just not a whole lot of room for them to move.
Yeah. In fact, I've seen
the 15
3 or 4 times the 15 years is higher.
Very unusual.
Here's how you do that. You say, "What I'm going to pay this loan off in 15 years, but I want that better interest rate." Ask us. We'll tell you what your principal and interest payment should be, and that's what you pay.
You can be in control of it. Yeah.
You are in control of it if you choose to be. Number
10. If you are in an adjustable rate mortgage, get out of it. This is the time that you should be in a fixed rate mortgage. If there's ever been a time, this is it right now. And I want to tell folks, you know, we did a show a few weeks ago about scams that you get in the mail. Look how low your interest rate is, and then we read the fine print. It's like, well, it's going to cost you 3 points or $9,000 to get that interest rate. It's just deceptive. I received one in the mail the other day where the interest rate was very low, and I was like, well, let's see how they're doing this, because I knew it was too low. They said, all you have to pay, your total closing costs are going to be $295. That's it. But my APR would have been over half a point higher than the interest rate. So I knew something was not right. When I looked at the offer more closely, it was for an adjustable rate mortgage. They wanted to put me into an adjustable rate mortgage when we have historic lows on fixed rate mortgages. If you're working with somebody and they even suggest an adjustable rate mortgage, run away.
Yeah.
It's not good for you right now. It's not good for you right now. Call us. You should be in a fixed rate mortgage.
You know, I get all kinds of stuff all the time from that looks like it's from the Veterans Association. It's not. More than likely, it is somebody that saw that you've done something on your credit. They see if it's VA, and they're all over it. Read it, guys. It's
They have a
so
picture
much
of the eagle in their logo. They
fraud,
look very
yeah,
official.
it's
Or you'll
ridiculous.
get something. If you've done a loan with us, if we helped you buy your home, you might get something in the mail saying, regarding your gold financial mortgage, it's not from us. That's just an advertiser trying to be sneaky.
So if you like this video or you want other suggestions, please reach out to me, Rob, Janet, Lana, anybody that works with our Gold Gig Harbor office.
Call us with questions.
Yeah.
The numbers are right there.
Always happy to help.
Yeah.
Also, please share this video and then go to www.realtalk.mortgage. That takes you right to our YouTube channel. Share that with all your friends. We want to talk about anything you want us to talk about. We're thankful. Next week is kind of an exciting week. We don't know for sure if it's going to be on a Thursday or a Friday, but we are getting sponsored for the first time by Destination Harley-Davidson in Tacoma. We will be doing the show there.
Yeah.
And
come and see us there.
please come and see us. We'll let you know before we do the show. In addition to that, we're going to do a drawing for a free turkey from the Lee McGee team.
Yeah.
So we want to give back anywhere we can.
Thanksgiving.
I'm Craig Lee,
I'm Robb McGee.
and that's Real Talk with Rob and Craig.